good afternoon, good evening, depending on where you are. Welcome back to news trading session number 3. Obviously, we're going to be doing our CPI trade tonight. So yeah, very interesting. A lot hinges on what's going to happen tonight as well. So yeah, we'll see what happens there. Either it's going to bring stability into the market for the next 2 months or so, or it's going to cause a little bit of a chaos. All right. Let me know if audio is coming through okay. I think we can probably do with a much higher output gain here. Let me try this. All right. Okay, audio should be coming through okay. Let me know if there's any issues. But yeah, good morning, good evening, good afternoon, wherever you're from. Okay, to let me know if you want to say hi to everyone here, where you're from. That would be great. Alright, my name is Viren Jono. Let's get started with a quick disclaimer. Any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risks due to high volatility. Market reaction to news can be swift and unpredictable, which leads to high trading risks and delays in order execution. So be very attentive when determining the volume of transactions and consider all possible risk factors. Audio? Not that good? Okay. Is it better? I kind of pushed the gain up, but yeah, we need to work on that. I'll move it closer to it's literally in front of me. But anyway, let's get it started. Just a little bit about myself. My name is Hirohiro, and I've been a full-time trader for over 20 years, 22 years actually. And I've been a professional trading coach and technical analyst since 2007, working for several global brokers since a long time ago, nearly 20 years. But yeah, my expertise is in the Ichimoku Kinko Hyo techniques, which is the Japanese charting techniques, and I've also been invited as a guest speaker trading investing expert across Australia, Investfair in Singapore, as well as the ATAA and APTA conferences, which is the Australian Technical Analysts Association. If you do want to see, if you guys are curious and you really want to see, what I've presented for the ATA during the conference, it is actually recorded. You can actually go to the ATA website and check it out if you search my name there. All right. Bonuses for participants. As per usual, I'm going to give you the code TW deposit bonus if you want to use it. That'll be awesome. If you don't want to use it yet, you can save it out. It is still going to be valid until the end of the year. And you should already have access to the private Telegram channel if you have attended the previous sessions or registered through email for this live session. Alright. Audio still not clear? Oh, okay, yeah. Let me try to pick it up. Alright guys, I'm gonna bring down the audio a little bit, alright? I think it's breaking up because I pushed the gain up too high here. But yeah, let's do this. Okay, see if it's actually better, because I don't really like pushing it up too high because it then everything just breaks apart here. But yeah, let's test it out and let me know if we fix it. All right, let me know if audio improves from this moment onwards. Let me know the moment I change the slide. I'll check back on the audio here, because remember there's always going to be a delay from my side to your side. Non-farm 2024, that's going to be the code is non-farm 2024 2024, valid until the 31st of December 2024 if you want to use the code TW deposit bonus. Yeah, that's actually an echo. Okay. Okay. Super sorry. Give me 1 second. Is this better? I was actually selected on a different microphone. Let me hear it out. Okay. We're good now. And thanks for letting me know with the audio. Good thing we fixed it. Anyway, obviously we're gonna go through with a couple theory sessions. Yeah, perfect. Cool. Yeah, I was actually using the microphone which is over there, and I'm actually not using the microphone in front of me. But sorry, my bad on this one here. All right, so we're gonna go through the theories first, and we'll try to go through this as quickly as we can. So what is inflation? Inflation is basically the rate at which prices for goods and services rise. Most commonly used inflation indices are consumer price index and core inflation, and if you guys are new here and have not gone through some of the theories on inflation, I'll go through today a little bit quicker because I do want to talk about a couple more stuff that's going on in the market there. But if you want to pause it and you can read the slide if you want to, or maybe view last month's video if you want more detailed explanation. But I'll try to get through this as quickly as we can so we have a little bit more time to look at the charts. Okay. All right, so CPI is a critical indicator of pricing pressures in the economy, provides you with a gauge of inflation, and forex traders monitor the CPI because it can lead to changes in monetary policy conducted by the central bank, obviously, which can either strengthen or weaken the currency against rivals in the market. And for tonight, we are definitely going to be looking at whether or not the jumbo rate cut that was done last month is that going to be enough so that the FOMC might not even cut in November? We don't know right now at this point in time. I think expectation for the FOMC to cut 50 basis points next month is probably near zero at this point in time. 25 basis points is basically in play. I think there's a little bit more, consensus. Sorry, not consensus. A little bit more thoughts by market participants that the November might not be a live rate decision. So we'll see what happens there, but we'll take a look at that, a couple of scenarios. But CPI basically measures your cost of living. It includes broad range of goods and services purchased by consumer, all right? Obvious, it's pretty obvious. It's called Consumer Price Index, right? Anyway, it includes international personal consumption items. So if you import some stuff from overseas, if you're in the U.S., that's going to be part of the CPI as well. Scope excludes changes in interest rates or costs, right? The PPI itself, it measures real growth in output. The PPI is produces price index. It's the opposite of consumer price index. Consumer price index is, how much things cost to purchase, while the PPI, it's actually the production costs themselves, right? So PPI also includes items produced for personal consumption. It does not include imports, so it doesn't measure any imports, import costs and whatnot for the production of the costs. It also encompasses services with prices, including an interest rate component. The CPI numbers, it's not really measured through the interest rate. So those are going to be two differences between the CPI and the PPI. Okay, so what is core inflation? So core inflation is a core CPI, and it basically refers to changes in prices of goods and services, excluding those from the food and energy sectors. Now, these items are going to be excluded from the measure of inflation because their prices tend to be more volatile. And when we talk about the food and energy sectors, food that's being excluded are basically fresh produce. Those are fresh foods are going to be excluded because they don't really have a long shelf life. And also, some items are going to be seasonal. If there's a disaster, for example, or a prolonged drought, then there's not going to be a lot of fresh produce. It could push prices up. So that's the volatile component. That's the reason why, with the core inflation, we take out the fresh produce and energy sectors because, as you all know, energy prices are easily affected by geopolitical events, right? Like the recent happening right now. Okay, so let me go through this. I know we're a little bit early to get here, but it's fine. I do want to talk about a couple of things. And the first one is let's take a look at the inflation rate being expected here. It is at 2.5% currently, and the consensus is for a drop to 2.3%. Now, this is going to be the breakdown on everything. This is the headline inflation. Then we are not going to be focusing on headline inflation tonight, right? But right? If we don't get a drop in inflation today, then obviously it's going to change everything as well. Headline inflation, it's currently at 2.5% tonight. Everyone is expecting 2.3%. Now the consensus done here, 63% of analysts surveyed for the consensus tonight says it's going to be 2.3%. Some say it's going to be 2.2. There's also a couple of small percentage that it could be a 2.4%. Regardless, if we don't get a 2.3%, it will upset the market to a certain degree, especially if we get 2.4 or 2.5. Remember, the previous one is going to be 2.5%, which is here. That was last month's. Sorry, that was the August reading. We're looking at the September reading right now for tonight. 2.5. Market is expecting 2.3% in terms of yearly growth. But if we get 2.4%, that could actually push the US dollar up significantly. If we get 2.5%, the market is not going to price in a cut in November. So just keep that in mind. This is basically the upside surprise. If we get it, then it would be great for the US dollar. Now, what if inflation comes down to, let's say, 2.2 or 2.1%? Then everyone is going to start pricing in for a 50 basis points cut in November. So these are going to be your two surprises. If we get exactly as per consensus, then I don't think there's anything much that's going to happen. I think that's still going to strengthen the US dollar, right? But if we get a 2.1, 2.2, that could potentially weaken the US dollar. But in terms of how huge that impact is, this one here, I'm not quite sure whether that's actually going to be a huge impact if inflation is actually below consensus. So typically with the scenarios every month, we come up with 3 or 4 different scenarios. And for tonight, scenario number 1 is pretty simple. If we get 2.4, that would be a surprise upside. Inflation has come down, but not as per consensus, right, in terms of growth there. If we got 2.4, 2.5%, then it could actually boost the US dollar significantly. Okay, it will smash the Euro USD, the Pound USD, and everything else. And especially with the Pound USD and the Euro USD, they are at critical levels at this point in time. So tonight is actually pretty important for whether or not we get that surprise movement. If the market comes in at if the CPI comes in at 2.3%, then I don't think we're going to see a lot of volatility, all right? But I think it's still going to have an impact on a stronger US dollar. So just keep that in mind. If we get as per consensus at 2.3%, even though inflation rate has gone down from 2.5 to 2.3%, it doesn't mean that it will be a boost. It will be a pressure on the US dollar. I think the US dollars could still be a strong currency. Okay. This is the yearly numbers. This is the monthly growth. Monthly rate of change for tonight, it has been at 0.2% for 2 months, July and August. So for September, the consensus, it's at about 80% to 0.1% in terms of the monthly growth. Okay. Core inflation expected to remain stable at 3.2%. The consensus here, it's pretty tight. About 88% of the consensus here of the survey done, 3.2% is expected. It's pretty much unchanged. You can take a look at the forecast there by Trading Economics. It is at 3.1%. So we could see a lower core inflation number, and whether the headline inflation or the core inflation is more important tonight, the core inflation is actually back online. Hello? I think I just got disconnected. I don't know about now. Are we back online? Looks like we're back online. Not in a rush tonight. I'm gonna take it easy. So you guys have a lot of time to ask me for stuff. Okay. Looks like I'm online. Yeah, I think there was a little bit of a drop off there. Let me check, because I don't really want to see what happened last time. I think there was a drop off last time when we were doing, was it CPI as well? Give me a second, guys. I just want to make sure everything is all right. Yep, everything is good. All right. Oh, good. Anyway, back to core inflation rate. This is the one that the FOMC is going to be focusing on. And for tonight, we're expecting 3.2% unchanged. So we'll see. And this is going to be the main one. If core inflation pick up, then that's going to be a huge boost for the US dollar. If we had a really low core inflation, the surprise here is going to be 3%. If we get 3%, that's going to fall in line with the FOMC's target range of 2 to 3%. Then market is going to price in for another jumbo cut in November. So main focus is going to be the core inflation. But if we take a look at the rate per month, it is expected to be at 0.2%. So again, a drop from 0.3 to 0.2. However, if we take a look at the movement here, monthly change, rate of change since June, July, August, we have seen this creep up by 0.1% every single month. And for tonight, we're expecting this to drop to 0.2%. So tonight, the story is we are expecting a softer inflation number. We are going to see this inflation to continue here for the U.S. economy. However, the main focus for the FOMC is no longer the inflation rate at this point in time. It's the labor market, and we know from last week the labor market was pretty strong. So yeah, we got the FOMC meeting minutes yesterday as well. And you know, if you take a look at the reading on the FOMC meeting minutes, last month, I think there was some voters that wanted a 25 basis points cut, but again, majority obviously voted for the 50 basis points. And the way they look at this is basically Jerome Powell managed to convince everyone there that they're likely behind the curve. We need to go ahead of the curve, and that's why we were doing 50 basis points. And going forward into the future, in terms of how fast the pace of the interest rate, I think that's going to be the main focus. Is not how big the cut is going to be. So again, market is not pricing in a 50 basis points cut in November. There's no rate decision in October, so we're going to be looking at 7th of November, which is next month. 25 basis points is expected. Again, however, if the inflation number it's really surprising. Really depends on how fast the inflation drop. If we have below consensus, then markets start pricing in for 50 basis points. That could push the US dollar down. However, if inflation comes in slightly higher than consensus, that would actually create a lot of volatility in the market, because no one is pricing in for a higher than expected inflation rate at this point in time. Okay. So if we get a mixed data, depends on the mixed data itself, right? If we have, a lower core inflation, higher headline inflation, we might see a little bit of a volatility. But once everything settles down, the core inflation is going to kick in, and that's going to be the main reference point for the market. Okay. All right, what do we have here? So let's go to the chart and see what we can do. There was actually a buy limit position here on the Dow Japanese. I'll come back to the Dow Japanese in a minute here, but let's take a look at the Euro USD here. Was that on Tuesday? Tuesday we did a session. Nearly got it. If we take a look at the sell limit there, I think we missed it by just 1 pip. Okay, so I would still lift the sell limit up there. I'll adjust the sell limit here to 1.10. In terms of stop loss, we will have it a little bit higher, 1.10, 1.1020. So we got a limit order as well as a stop order for tonight on the Euro USD. The limit orders that we have here, this is really more on long-term positioning. So if we do see a pullback up to 1.10, then we still expect that to be a strong resistance. And for right now, for today, we still want to create a buy stop. So let me just move the take profit there a little bit lower there, just in case if we hit it. I do want to get out 1.09 from 1.10. Right now on the other time frame, we do have a little bit of a, I wouldn't say it's a perfect corridor of volatility at this point in time. However, it is enough for us to position ourselves. 1.0950, that's going to, sorry, 1.0950, yep. 1.0950 is going to be your buy stop. It's pretty simple. And in terms of the sell stop here, we could have it 1.0925, 1.0920, just to give it a little bit more room. 1.0920, it's where we want to have our sell stop. The range on the Euro USD, I think this is pretty reasonable. It is actually pretty small. From the sell stop to the buy stop, it's going to be about 30 pips, right? Target level for a buy stop, if we hit it, let me just, we typically usually don't have the time to do this, but yeah, target for buy stop, we are going to take profit at 1.09 1.0975, no, 1.09 1.099 85 to 90, right? Just about 10 pips below 1.10. And your stop loss, it's going to be at 1.09 15, slightly below the stop there that we have. That would be our buy stop in terms of positioning. And for sell stop, our take profit is going to be below 1.09, obviously 1.0875. Our stop loss is going to be at 1.09 50. That would be enough. Okay, let's see if it's going to give us a good one-to-one risk to reward ratio. I think it is a good risk reward ratio. So we got 3 pending orders for the Euro USD. We got a sell limit at 1.10 with the stop loss at 1.1020 and a take profit at 1.09. We also have a buy stop at 1.0950 with a stop loss at 1.0915 and a take profit at 1.099. And for the Euro USD, we also have a sell stop at 1.0920, stop loss at 1.0950, and take profit at 1.0875. Okay. All right. Pound USD. This one is a little bit tricky on Pound USD. We are really pushing the boundaries here. Not ideal for a stop orders, but if you do, then you can have your sell stop below 1.3050. You can target 1.3 at this point in time. I don't think we have enough time to set our target here, but for the buy stop, it's going to be above 1.31. Okay, so this one is pretty easy. This is all psychological level. A buy stop at 1.31, a sell stop at 1.3050. Okay, that's pretty easy. Dollar yen here, we don't actually have the corridor of volatility for dollar yen, so just be mindful if you are going to be trading dollar yen. The range has also widened as well. If you take a look at this one here, it has gone and create a higher high and it actually created a new high and a new low outside of the range for today. Okay, so this is today in Asian session. This is the range during Asia. And UK Open, it kind of push up and then it kind of break down to the downside as well. So this is a little bit choppy. But if you want to trade this, then your buy stop is going to be 149.60, about 149.65. And your sell stop is going to be at 148.75. Below 148.75, that would be about 148.70. This one here is a little bit risky, so just be mindful of that. And we also have a buy limit order here, also at 147, right? Stop loss, you need to have it here. And for target take profit level, it is going to be a little bit higher at 151. Okay. So again, we also have 3 positioning on the Euro USD. We got 2 on the Pound USD. We got 3 on the Euro USD. Aussie USD, not really keen on trading Aussie USD at this point in time in terms of stop orders because 67 cents could actually hold strong for the Aussie here. So this one here, we might actually prefer a buy limit on the Aussie. Buy limit at 67. All right. So I much prefer a buy limit here at 67, and in terms of stop loss, no more than 0.6675. That would be 6670. That would be, how much I'm going to be risking. 0.68. It's going to be where we want to take our profit. Okay, so that's going to give us a really good risk reward ratio. But yeah, could be a little bit of a risk, but hey, it's 25 pips in terms of risk, not really that of a concern here. All right, gold, we have broken below the symmetrical triangle, obviously on the daily time frame, so we have broken lower. Gold in terms of range here, you got to buy stop at 26.25. All right, and your sell stop, it's going to be below 2600, so 2600. It is huge, right? We're talking about $25 here between the buy stop and the sell stop. Just be mindful of that. Not that too keen on buying gold at this point in time, but really, I think it's best to trade gold after news is released. Okay, so for tonight, we already have a lot of positioning. You got Euro USD, Pound USD, Dollar Yen. Euro USD and Dollar Yen, we have a limit order as well as a stop order. Also on the Aussie USD, we have one limit order. All right, data, we still have 3 minutes, so let's take a look at oil. So gold, you can trade it if you want with a stop order, but I think in terms of the range itself, it's actually pretty huge. As I said, I'm not too keen on this one here, especially if we go in onto the 15-minute time frame. Technically, we are moving a little bit more to the upside here, so it doesn't have the corridor of volatility that we're seeking for in a short-term time frame. So I would trade this after the news is released at this point in time. But generally, if we take a look at the daily time frame, I think this is still in line with the outlook that I've published on Monday. That we are anticipating that correction to happen. We are pretty much at support for gold here at 2,600 on the daily time frame. Okay. All right. For oil, we don't have the corridor of volatility for oil, so we are not able to create a buy stop or sell stop orders for oil. So we will trade this after the news, but again with the whole geopolitical tension that we have here, oil is actually approaching its limit. Its limit is going to be at 80. So if you're buying now in terms of stop loss and whatnot, your stop loss has to be below 72. Target level for this one here, you're going to be limited to about 75, 76. But I think we are looking at a lot of volatility for oil, not seeing a lot of movement here through the geopolitical tensions that we have. All right, data is going to be released anytime soon. All right, main focus is definitely going to be on the Euro USD and the Dollar Yen. Pound USD should be contained, so just keep that in mind. All right, waiting for data to come in. Standing by. There we go. All right, we got sell stop triggered. Inflation is at 2.4%. As you know, don't whipsaw my position on this one here. Let me close the Euro USD buy. All right. I'm keeping my sell Euro USD, Pound USD buy stops. I want to close my Pound USD buy stop. Something just got hit by a stop loss. What happened? All right, Pound USD. You're earning Pound USD. Euro USD was closed out. Oh, it actually hit our profit on the Euro USD. That was pretty easy. Pound USD, Dollar Japanese Yen, everything. Let me read through the data that we have here, if there's any mixed numbers. Core inflation rate month-on-month actually is actually at 0.3%. This is higher than expected. Core inflation is also higher at 3.3%. Inflation rate per month, it's up at 0.2%. So headline inflation, it is higher as well at 2.4%. So we're looking at a little bit of a higher inflation for the US here. Okay, Very interesting. All right, let's focus on gold. I wouldn't be buying gold at this point in time. Just be mindful of that. Definitely not thinking of going long the euro and the pound at this point in time. The data that we have here, we have inflation coming in higher. Core inflation, it is higher than consensus, 3.3%. Headline inflation is at 2.4%. Not, it is higher than consensus, right? Consensus for 2.3. Monthly rate of change is also high, 0.2%, and for the monthly numbers. And the core inflation rate per month has also remained stable at 0.3%. So we're not looking at inflation coming down here for the market there. So I don't know what the reaction is. We are looking at pound. Let me bring this up, and I do want to explain a couple of things on pound, especially on the sterling here. So this is the sterling here, and the reason why I'm not buying it on the hourly time frame, technically it's still below the resistance one. Technically it's still below the Ichimoku cloud on the hourly time frame. However, if we take a look at the pound USD on the daily time frame, it does pose a couple of interesting view. All right, and this is as per our outlook as well. We might actually test 1.3, and it came very close to 1.3. So I don't know if this is completely done or not, but for the pound USD, you can go with a buy limit at 1.3, right? I know this is still a pretty choppy market condition right now. I think it went down to 1.3025, but is that going to be enough or not? I don't know, but I do want to have a buy limit at 1.3. If it hits, then yeah, it's good and it's valid until price move above 1.31. However, if price move above 1.31, then you need to cancel out your buy limit on this one here. And for this bounce here, we are going to target a little bit higher. We're actually going to target 1.32. Stop loss for the buy limit that we have here, it's going to be at 1.29. 50 should be enough room for the market to work with. All right. So we got to sell, and we also have a buy limit. In terms for the sell here, for the pound USD, we want to aim the 1.3. Pretty simple, right? So we are shorting pound USD. But in terms of stop loss, you don't really want this higher than 1.3150, right? That would be your stop loss on the pound USD if you're thinking on shorting the pound USD. Okay, so pound USD, as long as it's trading below 1.31, market settles down. If you take a look at the reading here, this all points to an inflation that it's not really cooling off as quickly as what the market is expecting. So whether or not there's going to be a rate cut happening, that could change. And let me show you the CME Fed Watch tools that we have here. All right. So this is the CME Fed Watch tool. And this is what I'm actually going to be afraid of what is going to happen in the market. Obviously, this is not updated, but once this is updated, according to the latest inflation number here, the rate for no cuts in November will likely go up to about 36, 35, 36%. Okay, that would be the expected move on the Fed Watch tool for tonight. So just keep an eye out on that. I think if the market starts pricing in for that, then we could definitely be looking at a stronger US dollar at this point in time. So we'll see what happens. But at this point in time, obviously this is not updated. This is data as per yesterday. Okay, so interesting reaction here. We're not really looking at a push in either direction on the market here. A dollar Japanese yen, I think it actually triggered a sell on the dollar Japanese yen. Dollar Japanese yen is actually weakening right now, so positioning is actually currently hedged. I still would, I would keep the buy stop. I would keep that buy stop there. And I would have my stop loss just slightly above that buy stop. Just about there. Target level for this one here on the dollar Japanese yen is going to be limited to 148. Everything else in the market, the Aussie USD, it didn't trigger, but it should have triggered because it hits 6.7. But it didn't trigger my buy limit just now. But if your buy limit was triggered at 67 cents, keep it. Stop loss, you should have it 66.75 as well, unchanged for the Aussie USD. But because this one doesn't hit on this platform, I'm actually going to close the buy limit here because it should have hit the buy limit. All right, buy limit on pound USD, I'll keep it. The dollar Japanese yen buy limit, I would keep it. The euro USD sell limit, I would keep it as well. The dollar Japanese yen buy stop, I would keep that as well. So we do have short-term and longer-term trades happening right now. But I think we're looking at the market, pretty much coming back to what it is. It is pretty much a huge whip happening in the market. Obviously, we need to look at the breakdowns of the inflation number here, but just looking at the current rate, it is higher than what the market consensus is. What was that? What was that? That's market being confused in terms of pricing it. But yeah, Aussie USD, if your order at 67, the buy limit was hit, please keep it. It actually went there. I think you might have missed it by 1 pip because of the spread widening. But looking at the pricing there, it actually hits 67. So yeah, maybe we should give more room here. But the buy limit at 67 should have been triggered. In terms of your target levels, it's up to you what you want to do with this one. 67.75, 68 cents. That would be reasonable for the Aussie USD. It is a relatively safe currency. I don't think we have a lot of volatility for the Aussie USD. I think this one here is okay. Right. Let's go into the charts and let's take a look at the positioning on the market here. A lot of confusion here. But generally, the pound USD is still below the Ichimoku cloud. It's still below 1.31. I still think this is actually going to go to support 3 at 1.3. And that's the reason why I still have that buy limit at 1.3. I think the pound USD can still have room to go a little bit lower here for the pound USD. And the euro USD, it is bouncing off support. I don't think this is going to be strong enough to break below 1.09. However, depending on how the market is actually looking at it, momentum could shift in about an hour or so once everyone take a look at the breakdown of the inflation numbers here. But we're still looking at 1.09 as a strong support. So if you have a short position on the euro USD, make sure your target level is going to be at 1.09. Okay, and your stop loss for this one here should now be at 1.0950. You don't want to have a stop loss be on 1.0950. That's where the weekly that's where the daily pivot is located. But yeah, support 1, support 2 on the pivot has been breached. Support 2 is still holding on strong. 1.09 is still likely going to be a strong support for the Euro USD. So if you're thinking, okay, I want to go short Euro USD, try not to aim below 1.09. It's still really hard to break 1.09 at this point in time. All right, Aussie yen, sure. Aussie yen 100. This is pretty neutral. I think this should actually be very supportive. I like Aussie yen. I really like Aussie yen right now, and I think we might have a position on the Aussie yen. I would prefer to go long Aussie yen here. Stop loss 99.75, pretty easy. All right, and target level here is going to be 155. That would give you a good risk reward ratio. You can go a little bit higher if you want to, 175, 180. I think that would be an okay trade. Aussie yen. All right, that's an Aussie yen. We haven't set up an Aussie yen here, but let's load it up. Oops. Blank. There we go. We go blank and Aussie yen. We are going long Aussie yen. In terms of stop loss, all right, show great levels. There we go. All right, this one here you can go for 175. I think that's about right. For stop loss, you don't want to have a stop loss that's too far at this point in time. Let me just double check on the trading view here. Stop loss should be 99.75. That's about right. $99.70 actually. Risk reward ratio is still it's still gonna be much larger than 1 to 2. But yeah. This one could be an okay trade. I think in terms of risk for a yen cross, it's not much. It's only 30 pips. That's all right. For a yen, 30 pips doesn't equate 30 pips on the Euro USD, you know. It only probably equates to about 20 pips. Sorry, I might have missed something. Neptune, you're asking for pound USD, right? We did went to pound USD, and you're asking for Bitcoin. Right, I didn't read the Bitcoin. Or maybe I don't want to read the Bitcoin. Anyway, let me just add that in there. Hold on, let me bring it out. I'm not looking at this here. Are we looking at the same thing? Okay, I'll bring in this one here for Bitcoins. I think we got a couple key levels to watch out for. Still not as interesting to me. I think as we're still just bouncing off whatever we have here, about 60,000. We are closer to 60,000. So if you're thinking of buying Bitcoin, at your stop loss is going to be just likely below 60,000. 59,700. That's okay. Much better positioning on Bitcoin here. I wouldn't say this is completely going to be bearish or anything like that. I think we're pretty neutral. I think we have a strong support at 60,000 at this point in time. But yeah, that's from a daily perspective. Hourly perspective probably wouldn't have an impact on the inflation number here, but let's see. Let's see the hourly. Okay, hourly signal being capped by 61,500. If we have an hourly close like so, below 61,000, then you probably want to go short. Targeting 6,500 or 60,000. That could actually still be an ideal move on Bitcoin. But on the hourly time frame, if we take a look at the positioning on this one here, I think we have, I don't need to draw it, but if you want to see it, you can actually see that there's a resistance trend line being drawn up here. That's likely still going to cap market from progressing any further. That cap is going to be met at 61,500 in a couple of hours' time. So that's going to be the limit for you today. Prefer to buy or sell? Obviously, this is not going to be impacted by the CPI number in all honesty because it's crypto. A lot of people think they are actually fundamentally driven. It's not, okay? All right, pound for hour. Let me go through. All right, yeah, there's Zeus. I know there's Neptune. So we're just waiting for Hades to come in. Oh. So, no, Hades, it's not Hades. It would be Pluto if we go by Neptune or Zeus. But yeah, we'll see. It's pretty much the same thing, just different names. Okay, what do we have here? Gold. We already talked about gold, right? I'll talk about. It seems like initial job was claim wins over CPI. Yeah, I actually didn't notice that it was actually initial job was claims. 258,000. Right, I didn't see that. That wasn't in my radar, but yeah, thanks for noticing. Expectation 230,000. We gain a lot. 258,000. Pound USD for hour, please. All right, let's go for hour on the Pound USD. Nothing much to look at here, at least not on the 4-hourly time frame. Very hard to position ourselves like so. I would cut it off. I don't know what the next 4 hours is going to be. However, if I can take an eraser, I would actually erase that wick because by looking at that, we practically didn't go down below 1.3050. All right, I can draw 1.3050, and we didn't go down below 1.3050. Well, pretty much. Yeah, we got whipsaw, and we have that whipsaw in the market. I think that was a huge whip. But if you take a look at where the positioning right now, we're basically back where the hours started. Nothing. We don't have any changes. We don't have any breakthroughs. We don't have any confirmation for any breakouts. So, if your positioning was triggered by a buy stop or sell stop, I still think what we're looking at right now was pretty much. I'm still in favor for a strong US dollar at this point in time. In all honesty, with you guys, with the inflation number not coming down as per expected, and weekly unemployment claims, it's still data for 1 week. All right, the continuous weekly gains, continuing jobless claim was 1,861,000. That was about 30,000 more. 4-week average is also a gain from 224,000 to 231,000. However, it doesn't mean much because the last labor data that we have was pretty good, right? So overall, I think the labor market should be safe. I don't think this should be a concern. And right now, the market should be looking at the inflation number and say, hey, it's not coming down. With this data, is there any possibilities that Fed would hold their rate? On all pairs, yeah, on all pairs, we basically just, pretty much it. Let me look at gold. Emmanuel was asking for gold, and Aldi is asking for Nasdaq. We'll take a look at this, and we'll discuss the fundamentals. Yeah. Okay, so let's take a look at gold here. I think this is bouncing off 2,600, right? That's where the support is located. This is also. Per our outlook, we are looking for a little bit of a pullback closer to 2,600. I think that has been achieved. Doesn't mean that this is it. I don't think this is it. In all honesty, we just transitioned below the Ishimoku cloud. We might see this one pick up a little bit. For gold, if you are looking for a positioning on gold, I would try to short this either at 2,640. And I'm going to be targeting 2,600. I think we can go a little bit lower than that. Or you could target, half a sell limit at 2,650. I think these two are going to be where you should position yourself. Stop loss is going to be at 2,660. All right. So either you're going to have a $20 stop loss or you're going to have a $10 stop loss. But I much prefer to have a sell limit than a buy trade at this point in time. Why? Because at least from a risk reward perspective, you're still going to be looking at 1-2 or 1-5 in terms of risk reward ratio. If you buy now, if you go long right now, your stop loss is going to be below 2,600, below that spike that we have there. That's going to be below 2,600, and your target level is going to be beyond resistance 3. That we could see the market just being capped at 2,640. Your risk to reward ratio doesn't make sense because you're going to be risking double what you're trying to earn. So I would wait patiently. If it fails at 2,640, 2,650, that's probably a much better trade to take rather than just jumping in on this one here. Do people see the jobless claims data? It might be. It was actually, I completely forgot it was Thursday and we have the weekly jobless numbers. But yeah, NASDAQ, let's take a look at NASDAQ. What's the positioning on NASDAQ here on the daily time frame? You still have to look at the 10-year yield, all right? The US dollar could weaken right now because we have resistance at 4.1 and also where the Ichimoku cloud is located. That's also where the resistance one on the weekly pivot is located. If today fails, we might see the US dollar kind of falter a little bit. However, we're so close to the edge of the Ichimoku cloud, this could actually just easily transition as long as it stays above 3.95% on the 10-year yield. So I'm not writing off a US dollar
strength at this point in time, I think the US dollar could still be a strong currency. Just keep that in mind going forward, okay? All right. Nasdaq still holding on to 20,000. I think that's still okay. We're still above 20,000. I don't think that's an issue with Nasdaq here. I think probably intraday timing on Nasdaq, it's probably going to be okay. Nasdaq, it's probably going to be okay. You might see this one kind of retrace a little bit. All right. But I don't think this could actually go down below 20,100. Whether or not you want to go short or long on Nasdaq, I much prefer to go long on Nasdaq, right? Seriously, I think I much prefer to go long on Nasdaq, especially if we take a look at where price is currently bouncing off. That was a resistance yesterday. It was a high yesterday. So we broke through that high. And we're right now testing it as support. Price is still above the pivot level. I think this one here can go down a little bit more. I think we have a little bit more room. So if you're thinking of buying Nasdaq, you can do so right now. All right, you can do that right here, right now. I have your stop loss just below yesterday's low, targeting 20,400, 20,500 should be the max you should target, right? Or you could go for a buy limit at support 1, and your stop loss is still going to be yesterday's low. Target level, can be a little bit lower to 20,400. Those are your probabilities on Nasdaq. I'm not shorting Nasdaq at this point in time. I don't think we should short Nasdaq. I think this one here is still a pretty strong market at this point. I just don't have a reason to go completely negative on Nasdaq. All right. So let me answer that question there. With this data, is there any possibilities that Fed would hold their rate, or just cut a little at 25 basis points? Yeah. This is going to be a close one. Okay. There's going to be an argument come 7th of November that, hey, we might not have to cut 25 basis points. Why? We cut 50. Inflation is still not coming down as quickly as we want to. So they could go for that. Or they could say, hey, I don't care what inflation says. My focus is going to be on the labor market. So take a look at the last NFP number. That was a huge surprise. Unemployment rate is picking up. Do we have a reason to cut 25 basis points, or should we even cut rates? So yeah, as I said, that's why I brought up the CME Fed Watch tool, right? The next few days is going to be crucial. You really want to see in the next week or so what the CME Fed Watch tool is going to be. Right now, the no cut percentage is at 20%, right? If it starts going up, I think it should go up to 35% by tonight. By next week, if it's at 40 or 50%, then yeah, November is going to be a close call. But I still think they are going to cut 25. According to what we have right now, I still think there's going to be a cut. However, market is still going to start pricing in for a no cut on the 7th of November. Obviously, further data is crucial, but with the current inflation numbers that we have, I just don't see a reason that they need to go really quickly to cut interest rate, just because the labor data last week was good as well. If the labor data last week was bad, then the cut is definitely 100% guarantee they're going to be doing that. But because it was improving, or at least it wasn't as bad as what they thought, the 50 basis points that they have done last month, it could be enough. They don't really need to push further. CPI way more or unemployment? How can we gauge what to pay more attention to? At this point in time, the labor data plays a much more important role. How do we know which one? Well, that's why we listen to what the Fed says, and they will tell us what they're going to be focusing on. Are they looking at inflation numbers, or are they going to be looking at the unemployment rate? Because their mandate, the dual mandate, is to fix the labor market, right? And also to maintain price stability in the market, i.e. to maintain inflation in the market. Okay? Dollar Swiss going up. Sounds like we're in the lift. Dollar Swiss is going up. Dollar Swiss, for now, it's holding on strong, right? I'm not really too concerned. However, if it drops below 85.50, then yeah, I would be, yeah, I wouldn't go long. If price drops below 85.50, I wouldn't go long. But right now, looking at this current positioning on the dollar Swiss, price is still above the 85.50. I would probably go with a buy position, but not at the current price level. Might go a little bit lower if we can go at 85.50. So that's going to be closer to support there. Your stop loss is going to be below 85.30. Target level is back to pivot or even R1. But right now, being back to pivot provides you with a 1-to-2 risk reward ratio. So this is not a time where we should just rush into a market. I think this is good. All right, this is good because we now have the condition where we can kind of figure out what's going on in the market. We might get a much better position with the limit orders. So just keep that in mind. Okay. Dollar yen as well. I think this one here has done its complete correction there. Max is 148. This one here is bouncing off support 148.40. Should I buy? Should I sell the dollar Japanese yen? In all honesty, I'm not pro a weaker US dollar. Simple as that. The data just doesn't point to a weaker US dollar. Jobless claims, it's a weekly jobless claims. It shouldn't have a huge impact, all right? You might see a market just, looking at that and say, hey, we got labor market being bad. We got more weekly unemployment claims. But, in all honesty, I think I should still look at the inflation number. Core inflation is higher. Core inflation didn't go down. Core inflation actually went up 3.2 to 3.3%. That should give enough reason for the FOMC not to cut rates as quickly as what the market has thought. Come 7th of November with the current inflation numbers and the current labor data, it doesn't give enough reason. It doesn't give enough compelling evidence or reason for the FOMC to cut by 25 basis points. So I would expect in the next week or so, we could see markets start pricing in for a no cut, depending on the data. If we have good data coming in from the US, for example, retail sales and then GDP numbers, PMI numbers, if those starts coming in and the numbers are good, then yeah, I don't think we're going to have a rate cut in November. So just keep that in mind. Okay? All right. Okay, so this is the code. Again, it's non-farm 2024. We got about a minute or so. So any last minute questions, maybe if you have any last minute questions, please do let me know. But I think for tonight, I think this is good, right? It gives us time. The market is not moving. It gives us time. We might actually position ourselves with a limit positions. You could be opening a position that's closer to the stop there. You could actually have a smaller risk in the market. So I think this is good. But yeah, studying and retesting resistance several times form a three-way structure. Could we see more downside? Sterling yen on what time frame? I would say 1, 2, 3. That would be nearly complete. This is more ABCD in all honesty. On the daily, at least on the daily time frame. Could we see more downside? Really depends. Don't forget that there's going to be a Japanese election on 27th of October. And I think Bank of Japan is starting to be a pain in the market again as well today, right? Seeing how the Japanese, kind of weaken in the past few days, they start panicking again, threatening the market again. So I think there's still going to be that factoring into the market. But do I see further downside on the sterling yen? At this point in time, probably not. As long as it's traded above 190, which is a huge range from where we are right now. As long as it's traded above 190, I'm not too concerned. Or is there any risk of further downside? But again, sterling yen is not for the faint-hearted. Just to give you a reminder, throughout the month of September, it went down 10 yen, and then it went back up 10 yen. So we wiped out 1,000 pips, and then it comes back up 1,000 pips within a period of 2 weeks. So just keep that in mind. This is not for the faint-hearted. Okay, on the 1 hour time frame and the 4 hourly time frame. Okay, let me look at that. But on the daily, I think it's a little bit more ABCD rather than anything else. On the hourly time frame, I think we got one. We definitely have a bad two, and I think we've done five. Yeah, I think we have achieved that. We got completed wave three on this one here, so we should be in a little bit of an ABC at this point in time. But still very well supported. As I said, if we take a look at it on the daily time frame, anything above 190, I'm not too concerned for any downside weakness. On the hourly time frame, again, we're still looking at a hidden bullish divergence building out on the sterling yen. That's why the dollar yen, sterling yen, euro yen, I'm not too bearish on all this right now at this point in time. Okay, sounds good. That's a very good question. But yeah, all right. Let's wrap it up for this month. Thanks for joining in, and good luck with the trades for this month. I think all the major data has been released, right? So we should have. I think we should have an kind of a less volatile October compared to previous months. July, August, September was pretty volatile. Hopefully October, November, December, we are looking at a little bit of a quieter market here, but not quite in a way that there's some volatility. I think it's much of a safer, more predictable volatility. I think that's what's expected on October. All right. This month. Thank you for today. Wait, this month? Yeah, we're done for English sessions this month. You guys are going to be looking at me speaking in Bahasa Indonesia from next week going forward. All right, but yeah, let's wrap it up for this session tonight. Thanks for coming in, and good luck with the trades, and I'll see you soon.